Good afternoon, Trim Traders. It's about 25 minutes before the market closes, Pacific Daylight Savings Time. This is Dennis Wilborn with the Active Trend Traders with your 2-minute market update. Basically, again, our disclaimer. All materials presented here for training purposes only. Traders should paper trade any new method or system prior to risk of personal capital. Let's take a real quick look at the markets to see what they're doing so far today. The Dow Jones, very interesting. We're getting from yesterday's doji. We're going to bounce back up above the 20 and the 8-day moving average, moving back up into this level of resistance. The S&P, similar process, not quite as strong a bounce as the Dow, but as you can see, it's bouncing right back up into that resistance zone, if you will. That's one thing to remember, that oftentimes we think about resistance and support being a specific absolute dollar figure, but a lot of times it's a zone. As we see here, we've got a zone between 1871 all the way up to a little bit above, about 1883 on the S&P. We still have momentum coming out of the market, as we see down in this area here. Momentum coming back out of the market, and it's just basically still stuck in this little box that we see between the highs and the lows, which function as the current support and resistance level for the Dow. Excuse the train as it goes by. Yeah, those of you who join us for the midweek market sanity check, the webinar that we do on Wednesday nights, are very familiar with the train that runs right behind my home office. And so let's bounce over to the comp, the NASDAQ, see how it's doing. Again, a little bit less strong than the S&P and or the Dow. And as we can see, it is starting to, if we get a close here below this 50-day moving average, then we are probably going to revisit down here in the 4,150 level. But it too is in a support resistance area, support here, resistance up here at the top. Moving on to the Russell. Get rid of those drawings. The Russell, still lingering towards the lower side of yesterday's candle, but again, we found support in this area this morning as the stock bounces back up. As you'll notice over here, I use a 1-hour 90-day chart. The yellow line here on my intraday chart is the 50-period moving average, and it's phenomenal how close it corresponds to the 8-day moving average on my daily chart, so I can use that oftentimes as a trigger to either get in or out. As we see, we've just basically, today's price action has dropped back to the lows after starting up at the highs, and now it's meandering around trying to make up its decision on which way it wants to go. Just take a look at a couple of stocks. One of the ones I've been watching here is MasterCard. MasterCard, we've got a swing low here, which it is actually breaking below today. And if we get a close below that, that may foretell a further downside. We've got the 50-day moving down, the 8 crossing back below the 20. So clearly we could move back to the lower band of the Keltners, or if we get a larger drop in, it could back down here and retest at the 72 level. Currently I'm long of the some puts on this that are sitting at the what puts am I? Yeah, the April 78s. And they're profitable already, and so we have taken a little bit of profit off the table, but we're anticipating a potential move down into those prior support areas. Some of the other stocks that are interesting in that we talked about yesterday about Facebook. Facebook gets a little bit of a bounce today, and this could be well, it is a bullish harami right now. We don't know how it's going to close exactly. Bullish harami bouncing off the 50. Is this portraying that we may get a slight bounce up from here up on a low volume wedge up or bear flag? We'll see. Or Facebook could just continue to shape out the bottom of this cup type pattern and bull back up into the 72-75 level. Some of the other stocks that we had looked at, hadn't looked at, but Buffalo Wild Wings, really nice shooting star off of a gap up, followed by a bearish engulfing pattern, large bearish engulfing pattern, and now we've continued to another bearish candle, very wide range candles, both days, with a slight increase on volume. And you see the green volume down here. On that day we had the shooting star, or an inverted hammer, as some people call it. That was primarily, a lot of that volume, even though it was green because the price was up, was actually selling volume. That selling volume has continued over the last couple of days, and the momentum is starting to come a little bit back out of Buffalo Wild Wings. And the last one we'll leave it with today is Netflix. Yeah, Netflix, we talked a little bit yesterday about it. It broke the 100-day moving average. Today's action, we see it actually pulls back slightly above the 100-day moving average. Can't hold it, and then has returned and dropped back down. Its range today is $19.18 so far. So for those option traders out there, that gives some, there are definitely some strategies you can use on options, either directional or even some of the spreads that could make a trade on Netflix work well. We see here on the intraday chart, it basically just a slight bounce up this morning and then a significant drop in 400 all the way down to, correction, here is today's chart. Bounces up a little bit and then retreats, and that it retreated about, as we said, $19. So those can be excellent trades for the option traders out there. So with that, I'll call it a day, and thank you very much for tuning in.